Hello. One of my colleagues will have already reached out to and sent you a sample calculation as PDF. Now let's get down the business of how this calculation works. Let's start at the top. The first section shows you all components in your total all-in rate. The next section shows the contributions of the employer to Social Security and the pension fund. These are the contributions that must be paid based on your gross salary by employer and therefore not part of your employment contract. Detailed information about all contributions can be found in the section FAQ. What are the individual lines in the salary calculator? The first elements shown are contributions to the BVG, which is the main pension fund, and the second pillar. Our provider is ProFund, which has in most years paid the best interest to the account holders. For transparency, we separate savings contribution, which goes straight into your personal BVG account from the risk premiums and administration fees. Social Security, officially called old age, and survivors insurance, disability and supplementary benefits, is financed by the contributions shown next. In German, we normally simply call it HV. Solidarity is the basic principle here. This means that the risks are shared by all insured persons. The same contributions you will also find as an employee deduction from your gross salary later on. That's because those are split, half-half, between employer and employee. Besides the insurance premium themselves, the employer also pays an administration fee. So, if you're re-asking yourself, why is there family compensation fund listed to my calculation, even I have no children? Don't be alarmed. This is not a mistake on your calculation. The costs for child allowances are also shared. The contribution is based on the Canton Zurich in which our office is located, and the insurance provider Consumo, which is provided by Swiss Staffing. Next on the list are unemployment insurance contributions, followed by UVG, which is the accident insurance, and split in the different components to ensure that your full salary is covered. The normal SUVA insurance is capped. The sick pay insurance at RM is fully paid by the employer. There are no deduction on the employee side for this at all. If your salary below 148,200 Swiss francs per annum on a full-time basis, you are covered by the collective bargaining agreement, CBA or GAV for Gesamtarbeitsvertrag in German. For these, a contribution is mandatory, but also allows access to paid trainings and more. More details can be viewed at www.tempservice.ch. So, minus all contributions, all the social insurances in this section from the all-in rate, you get your gross salary. It is made up of your base salary and compensation for public holidays and vacation. Public holidays are not paid when they actually occur, but are compensated with 3.2% of your gross income every month, whether the month has several public holidays or none at all. On a public holiday, you will have a day off, but not receive a salary specifically for that day, as you receive your compensation monthly. The compensation for vacation, however, is kept aside and paid when you have actually taken vacation. As you can see, there are also some employee deductions from your gross salary. These are again pension fund contributions, Social Security, and the non-work-related accident insurance as a contribution to the CBA fund as applicable. If you are subject to source tax, you will find that the source tax is deducted from the net salary before tax. The net salary after tax is what will finally be transferred to your bank account. The calculation is done based on realistic hours worked per year, with vacation taken pro rata and bank holidays compensated. The actual monthly salary will vary with days worked and vacation actually taken. We are already at the end of our video. I hope you liked it. It isn't as complicated as it first seems is. For more details, please review. Ciao and see you soon in our next video.